About 15 minutes ago at 10:41 a.m., we detected 5,000 unusual options on Gilead Sciences, ticker symbol GILD, today, October 2nd. It is now 10:59 a.m. And so if you want to be notified of this type of unusual options activity data, make sure to subscribe and hit the bell icon. So in this video, we will analyze what this could mean for Gilead stock. Will it go up or down based on this data? As usual, we can immediately calculate the value of this trade by looking at the price that was paid for these call options. Okay, 77 strike calls expiring October 20. We can see that there were 5,000. So we multiply the 5,000 by the $49 that were paid. Okay, so $49 times 5,000, then this total value of the trade now is $245,000. So that's a piece of information, data point, that helps us also decide how much position sizing we want to put into this trade. Because typically when we trade, we like to put in more position sizing on trades that are valued over $1 million, because we found that those types of trades are a lot more accurate in predicting stock price movements, because those wealthy investors that have a lot more than $1 million have a lot more information, sometimes insider information and resources to predict the stock market prices. If you are interested in that type of data where they are valued more than $1 million, make sure to hit the join button on our channel homepage to learn how you can join our membership, where we share exclusive videos on stocks that have unusual options activity. All right, for Gilead today, since this is below that, we still traded it, and the way we traded it is based on the analysis we did on these 5,000 to find out whether this is bullish or bearish. You can see that here on the options chain. This is our trade. It's based on the 77 strike calls that we detected. There's 5,000 of them. Notice that on the open interest here, this column here, there was 6,711. That means that these trades for these 77 strike calls, they could have been bought to close, not necessarily to buy to open. If they bought it to open, this is what the profit loss diagram looks like. Okay, as the price of Gilead, currently trading at about $74, goes up, you can see the profit increasing. If it goes down, you can see on the mouse cursor here, it is a loss. You can see the Greeks, positive 23, so we know this is a bullish long trade with a theta risk of -3. So as time goes on, this option will lose value. Okay, and that's partly why we traded it with a different strategy for this trade. Okay, if we take a look also at the scenario where if they had bought this to close, that would mean that originally they had sold it to open, which is moderately bearish. And the fact that they buy it to close, it means they are no longer bearish anymore. And that is also why that agrees with the previous analysis that this would be a bullish sentiment trade. And so that is why we went bullish as well, and going long by buying the 75 strike calls and selling these 77 strike calls. And you can see by doing that, each of our trades cost about $71, and this is a vertical call spread here. Okay, and when we analyze this trade, let's take off this call options here. You can see here, this is our trade now, that we have a positive 20 delta, and we have a theta risk of only -1 in comparison to the call options had -3. So this is a less risky trade. And so we can also profit as the price of Gilead stock here goes up. We will also be profitable. you can see that the max profit is all the way up to about $130 if it keeps going up. And we are risking about $70. So this is close to 200%, because if you can invest $70 and you can make $130, that's close to 200%, because 140 would be 200% multiplied by 2, a 1 to 2 risk to reward ratio here. All right, so that is how we are trading Gilead, because we know that as also the price, if this price starts to go up, the theta risk will also start to reduce. Eventually, once it breaks this level where the blue line interacts with the purple line, intersects here, the theta will start to turn positive and actually be an advantage and push the profits upwards. So that's what we like about this trade in comparison to just buying the call options, which is a lot more risky. Right? So if you are interested in the way we trade with different option strategies, or you are interested in our data with unusual options, make sure to join our membership. And as usual, please smash that like button.